Imagine the entire global financial market holding its collective breath, eyes locked on a single ticker symbol, NVDA. It is February 25, 2026, and we are standing at the precipice of what might be the most consequential earnings report in the history of the semiconductor industry. As the clock ticks toward the closing bell, NVIDIA is sitting at a pivot point of $197.50, teased by a 2.4% jump in intraday trading that signals either a massive vote of confidence or a dangerous buy the rumor trap. We aren't just looking at a stock price, we are looking at the pulse of the fourth industrial revolution. If NVIDIA beats the whisper numbers tonight, we could see an unprecedented leap toward a $5 trillion market cap, effectively cementing AI, not as a trend, but as the backbone of the global economy. However, with expectations reaching a fever pitch, the margin for error has never been thinner. Even a good report might not be enough if the forward guidance doesn't promise a future paved in silicon gold. In this deep dive, we are stripping away the hype to look at the cold, hard data defining NVIDIA's trajectory today. We'll start by analyzing the immediate price action, breaking down why the $195.95 resistance level is the line in the sand for bulls, and what the options market is telling us about the 5% volatility swing expected by tomorrow morning. We're going beyond the surface-level revenue figures to dissect the Blackwell rollout and the Vera Rubin platform, which promise to redefine data center efficiency. We'll also tackle the geopolitical shifts, including the strategic H200 chip sales to China and how that impacts the bottom line. Whether you are a long-term HOD layer, a day trader looking for a scalp, or someone sitting on the sidelines wondering if you've missed the boat, this breakdown is designed to give you the clarity you need before the after-hours chaos begins. This isn't just a daily update. It's your roadmap through the most important trading day of the year, the technical battlefield. To understand NVIDIA today, we have to look at the immediate technical battlefield. As of this morning, the stock is showing aggressive strength, pushing toward the $197.50 mark. This isn't just a random number. It's a direct challenge to the heavy resistance at $195.95 that has capped gains for the last several weeks. On the daily chart, we are seeing a massive cup and handle formation that has been building since early January, suggesting that a breakout above $200 isn't just possible, it's overdue. However, look closely at the volume. While the price is climbing, the volume is slightly lower than the 10-day average, a divergence that often precedes a shakeout before the real move. If we fail to hold $192.50 during the midday lull, the bulls might retreat to the primary support at $183. Traders should watch the Relative Strength Index RSI, which is currently hovering at 68. We are approaching overbought territory, but in an earnings week, NVIDIA has a history of staying overbought for days as FOMO takes over. The key level to watch for a gap and go tomorrow is today's high of $197.63. A clean break there opens the door to the all-time high of $212.19. The earnings whisper numbers. Tonight's earnings report is the most anticipated event on the Wall Street calendar, and the official estimates only tell half the story. While the consensus is pegged at $65.7 billion in revenue and an EPS of $1.53, the whisper number, what institutional traders actually expect, is closer to $68 billion. This is a staggering 70% increase year over year. The market isn't just looking for a beat, it's looking for the magnitude of the beat. In previous quarters, NVIDIA has outpaced expectations by an average of 10%, but as the numbers get larger, that percentage becomes harder to maintain. We need to see data center revenue specifically cross the $60 billion threshold to satisfy the bulls. Furthermore, pay close attention to the gross margins. Management has guided for 75%, but any dip toward 73% due to the costs of ramping up Blackwell production could be perceived as a sign that pricing power is peaking. If NVIDIA hits the $70 billion revenue mark for the first time, it won't just move the stock, it will re-rate the entire S&P 500. The stakes are literally trillions of dollars in market capitalization. The Blackwell ramp-up, the core engine of NVIDIA's current growth, is the transition to the Blackwell architecture. We've heard Jensen Huang describe demand for Blackwell as insane, and today we are looking for the receipts. Reports from the supply chain suggest that production yields at TSMC have finally stabilized, meaning NVIDIA can now ship these chips in the massive volumes that hyperscalers like Microsoft and Meta are demanding. We are currently in the sweet spot of the product cycle where the older H200 chips are still selling out, while the high-margin Blackwell GB200 units are just beginning to hit the books. In today's video, we have to address the air pocket theory, the fear that customers might pause orders of old chips to wait for the new ones. If CFO Colette Kress confirms that the backlog for Blackwell extends well into 2027, the air pocket fear dies instantly. Blackwell isn't just a chip, it's a rack-scale system that costs upwards of $3 million per unit. If these are shipping at scale, NVIDIA's revenue ceiling is much higher than the market currently realizes. The Vera Rubin revolution. While the world is focused on Blackwell, the smart money is already looking at what comes next. The Vera Rubin platform, named after the astronomer who discovered dark matter. This platform is designed to be the dark matter of the AI economy. Launched officially at CES 2026, the Rubin GPU and Vera CPU are designed for the next frontier agentic AI. We are moving from AI that answers questions to AI that performs tasks, and that requires a 10x leap in processing power. Rubin is expected to deliver a 4x reduction in the number of GPUs needed to train massive mixture of experts models. This is a critical narrative for today's stock price because it proves that NVIDIA's moat is widening. Critics say competition from custom chips at Google or Amazon is coming, but Rubin's unified architecture makes it nearly impossible for customers to switch. If Jensen Huang provides a firm delivery timeline for Rubin in tonight's call, it effectively de-risks the 2027 revenue forecast, which is exactly what long-term investors need to see to justify buying the stock at near all-time highs. The China and geopolitical factor. We cannot talk about NVIDIA's price today without addressing the geopolitical elephant in the room. Recently, the US government granted a strategic license Plan B, allowing NVIDIA to sell modified H200 chips to the Chinese market, provided they share 25% of that revenue back with the US Treasury. This is a massive shift from the total blockade we saw last year. China historically represented 20 to 25% of NVIDIA's revenue, and that tap is being turned back on. Today, analysts are looking for clarity on how quickly this China revenue can scale. If NVIDIA can reclaim even half of its former Chinese market share without violating export controls, it adds an unexpected $5 billion to $8 billion in annual found money that wasn't in most models 3 months ago. However, there is a catch. The 25% revenue share tax will weigh on net margins. We need to hear how management plans to offset this cost. Is the demand in China so high that they can simply raise prices to cover the tax? If the answer is yes, NVIDIA has a new, powerful tailwind that most bears haven't accounted for. Software and the Grok acquisition. NVIDIA is no longer just a hardware company. It is becoming the Microsoft of AI software. The recent $20 billion acquisition of Grok's assets has signaled a major move into the inference market. While training chips get the headlines, inference, the actual running of AI models, is where the recurring revenue lives. By integrating Grok's LPU language processing unit technology into the NVIDIA stack, they are effectively neutralizing the only real threat to their dominance. Today's price reflects the market's realization that NVIDIA is building a closed-loop ecosystem between CUDA software, the new Grok-powered inference engines, and their Omniverse digital twin platform. NVIDIA is creating a software layer that is as sticky as Apple's iOS. In tonight's report, look for updates on software-related revenue. Last quarter, it was at a $2 billion annual run rate. If that jumps toward $3 billion, it changes the stock's valuation from a cyclical chipmaker to a high-multiple SaaS provider. That transition alone could justify a $250 price target regardless of how many chips they sell. Hyperscaler CapEx. The spending spree. One of the biggest bear arguments is that big tech will eventually stop spending billions on AI chips. But the data from Microsoft, Alphabet, and Amazon's recent earnings suggests the opposite. CapEx is actually accelerating. These companies are in a prisoner's dilemma. If they stop buying NVIDIA chips, they lose the AI race to their competitors. This forced spending is NVIDIA's greatest strength. Today, we are looking for confirmation that these hyperscalers are signing multi-year supply agreements. Reports indicate that Meta alone has committed to a tens of billions of dollars deal for Rubin systems. When companies like Meta commit that much capital, they aren't just buying chips. They are building AI superfactories. For you as a viewer, this means the cyclical nature of the semiconductor industry is being replaced by a secular build. We are only in the second or third inning of a 9-inning game. As long as the ROI for these tech giants remains positive, meaning AI actually helps them sell more ads or cloud services, money will continue to flow directly into NVIDIA's pockets. Analysts target the bull versus bear case. Wall Street is currently divided, and today's price of $197.50 sits right in the middle of the storm. On the bull side, Cantor Fitzgerald is leading the charge with a $300 price target, arguing that NVIDIA is sold out through the end of the year and already taking orders for 2028. They see a path to $50 EPS by the end of the decade. Goldman Sachs and Morgan Stanley are slightly more conservative but still bullish at $250, citing the Blackwell ramp-up as the primary catalyst. On the flip side, the bears led by firms like Morningstar worry about a valuation reset. They point to the fact that NVIDIA is trading at 46 times earnings, a premium that requires flawless execution. The bear case today isn't that NVIDIA is a bad company, but that it is priced for perfection. If the guidance tonight is even 1% lower than the $75 billion April quarter whisper number, the stock could see a relief sell-off back to $170. Knowing these targets helps you set your stop losses and take profit levels before the volatility hits. The halo effect: AMD, TSMC, and Broadcom. NVIDIA doesn't move in a vacuum. Today's price action is casting a halo effect across the entire semiconductor sector. If you are watching NVIDIA, you also need to keep an eye on TSMC and Broadcom. TSMC is the sole manufacturer of these chips. If NVIDIA is doing well, it means TSMC's fabs are running at 100% capacity. Broadcom, which provides the networking fabric that connects these GPUs, often moves in lockstep with NVIDIA. This is important for your trading strategy because sometimes the secondary plays offer better risk-reward than the main stock. For instance, if NVIDIA's report is good but the stock is already priced in, you might see a bigger percentage move in companies like ARM or AMD as the market realizes the entire AI sector is undervalued. We are seeing a rising tide lifts all boats scenario today. However, be careful. If NVIDIA misses, it will drag the entire Nasdaq down with it. It is the literal foundation upon which the current market rally is built. Final verdict and game plan. So, what is the final game plan for today, February 25, 2026? We are at a historic crossroads. The technical suggests a breakout is imminent. The fundamental demand is at record highs, and the product pipeline with Blackwell and Rubin is stronger than ever. However, the options trap is real. With a 5% implied move, the market is expecting fireworks. If you are a long-term investor, today is just another day of noise in a multi-year growth story. The best move is often to do nothing and let the compounding work. But if you are a short-term trader, the risk-reward at $197 is tricky. Buying the top of a range before earnings is a high-stakes gamble. A safer play might be waiting for the post-earnings gap to settle and buying the first successful retest of the new support level. My verdict: NVIDIA remains the undisputed king of the era. Whether we hit $210 tomorrow or pull back to $180, the trajectory for the rest of 2026 remains firmly upward. Stay disciplined. Watch the $195.95 level, and I will see you in the after hours for the live breakdown. As we close the book on this pre-earnings session, remember one thing: we aren't just trading a ticker symbol anymore. We are witnessing the fastest capital expenditure cycle in human history. Whether NVIDIA settles at $210 tomorrow or pulls back to $180, the underlying reality remains unchanged. The world is being recorded on NVIDIA silicon. We have moved past the era of if AI will scale and entered the era of how fast. Today, February 25th, is a milestone, but in the grand arc of the 2020s, it's just one more data point proving that the old guard of tech has been officially unseated. The volatility you see on your screen right now is the price of admission for being part of the greatest wealth creation event of our generation. Don't let a 5% swing shake you out of a 5-year thesis. If you've done your homework, if you understand the Blackwell roadmap, and if you see the moat that Jensen Huang has dug around this empire, then you know that the short-term noise is exactly that noise. Stay disciplined, keep your emotions in check, and remember that while the market votes in the short term, it weighs in the long term. And right now, NVIDIA is the heaviest hitter on the scale. Thank you for riding through this deep dive with me. If you found value in this breakdown, hit that subscribe button and join our community of forward-thinking investors. I'll be right back here the moment those earnings numbers cross the wire to tell you exactly what they mean for your portfolio. The future doesn't wait for anyone. Make sure you reposition to own it. I'm your channel name, and I'll see you in the after hours.